Miss Strawn, Miss Roberts.
Hi.
Hi.
Yes.
Uh, well, there's only two of y'all, so I don't know if we can give them a few minutes. It's only two of y'all, so I don't know. The other person's coming. Yeah. So I don't really know. But any of you had a chance to review chapter 10?
No.
No, ma'am.
Yeah, well, chapter 10 is quite just talking about the banking securities with bank solar securities. And like I said, in the exam, you'd have to be able to talk about the MAS. I could ask what is M, what is A, what is S, or what is T. And then advantages and disadvantages of taking security, which we know that um, that's collateral. So it's always good to have a good collateral. Then you'll see the key banking securities that the bank actually holds, your land, your life insurance, guarantee and indemnity, debenture, or floating charges. And sometimes we could say further charge, because like once you have a mortgage and you have good equity in your home, the bank will give you a further charge, which would be an equity loan, but they call it a further charge. So you get a further charge, which um, gives you the value of whatever equity in your home you can borrow against, a certain percentage against it. Talks about even valuation, talks about authorization, notification, deposits, which
Excuse me,
is
Miss Smith.
deposit in the deed.
Hi, Miss Smith. Can you give me a few minutes, please? I just have to run and grab something.
That's fine because ain't nobody in the yard to want.
Okay.
Alrighty.
Okay, so Ms. Smith, the exam could be from chapter 6.
The 10.
Okay. Oh, 6 to 10. Okay.
Miss Miguel, Mr. Pratt say he'll invigilate the exam. So you're going to BIS. Yeah.
Yes. Thank you.
No, you in thing you in Freeport. So you have to
Yeah.
do it online, eh?
Yes.
Oh, hold
Yes,
on,
that's
let
what
me
he did.
get- telling him now.
Remember, he did me by myself the last time.
Yeah. Ms. Lowell?
Good night.
Good night. How you thought class was finished?
No, I thought class was finished. I asked if there's any class tonight because I didn't get any email or anything to say if there was class or if there wasn't class.
Oh, yeah, class. It's just the other night when there was no class. I wasn't feeling well.
Yeah.
This is the last class. Yeah.
So
It's exam
our exam is still scheduled for next week.
on the 19th
Okay.
at BIFS.
What time?
Same time, 6.
Okay.
Yeah, the class is finished, but they have exam. They finished last class. There's no review sheet, so it's really from what I've given you all, chapter 6, chapter 7, chapter 8, chapter 9 and 10, I guess.
Okay.
Y'all
So
Mhm.
we just have to go over what you gave us last.
Yeah, because it's just chapter 6 to 10.
Okay. So the homework and stuff you gave us, just go over those.
Yeah,
Okay.
and well, 9 and 10, y'all didn't get homework for 9 and 10, so y'all have to
No.
look in the book. Yeah.
Okay.
Well, like I say, I know Miss Roberts had stepped away, so, but I guess we could start because I don't know who else coming to class because I haven't received a lot of persons' assignments, so I don't know. As we know, chapter 10 just talks about security, the different type of securities that banks or lending agencies would hold for customers. And if Ms. Scholl, did you have a chance to look at chapter 10?
I honestly was starting to study on chapter 9. I didn't get a chance to reach chapter 10 as yet.
Okay. You, Miss John, or either one of you could read for me, please. So like I said, I don't know if the other person's coming to class and it's already.
You want me to start from introduction?
Not really. You can start from quality of good banking security.
Chapter 9 looked at the questions which should be asked by a lender to judge the credibility of a lending proposition, especially the stability and certainty of primary source of repayment. In many cases, the bank also seeks security, insurance, and compari as a secondary source of repayment should the primary one fail. Security protects the lender in case things go wrong. In the
Okay,
USA,
stop right there, Miss Scholl. Okay, in the climate that we're in today, what do you think about them saying the lending proposition, especially the stability and certainty of a primary source of repayment? In many cases, the bank seeks security as insurance. As we know, in today's climate, how many people still have their insurance if the bank say the bank wasn't paying it? Because all banks don't insist that customers have life insurance. So what happens if customers aren't paying the bank isn't paying have their life insurance attached to an escrow account where the money is put there every month and it's paid from that account, from the customer's savings. So what do you feel the bank should do when it comes to when a loan is granted to a customer? Do you think the bank should actually ensure that customers have life insurance And just like how they have to pay house insurance, that life insurance is deducted, is added onto their payment and is kept in an escrow account. So when the payment is actually due, all the bank does is to take it from that savings that is tied to their account and pay the insurance. What do you feel? Do you feel the bank should do life insurance or it shouldn't?
Yeah, I feel like the bank should do it. That just give the bank security that they'll get their money back.
Right? Because if somebody has a mortgage and they die and there's no life insurance attached to it, and then the persons who actually living in the house are not able to meet the commitment, what happens then? The house is lost, the bank lost. And only way the bank would, I guess, get monies back if they put the house up for sale, and it's not to say that they could actually get what the house, the market value of the house is, because they could put it to market and people continue to bid lower than the market value. And at the end of the day, they say we just need to recoup something from it. So sometimes the bank take a loss and they just have to write off the uncollected amount. Go ahead, Miss Rowe.
In the USA and other parts of the world, security is called collateral. It is interesting to note that the term collateral is derived from the Latin for side by side, emphasizing that there are two contracts, one for credit and one for security. For the practical reasons, banks prefer the type of assets where ownership can be evidenced by documents, certificates, deeds, etc. Without the relevant documents, no transfer of ownership or sale is possible. This gives effective control over the asset to the one person holding the documents.
Okay, hold again, Miss Rowe. Okay, so when they talk about deeds and certificate, any of you know what type of deeds they are talking about when they say deeds or certificate? We know certificate could be, the bank could be holding government bonds for a customer who has a mortgage, but they know that, government bonds is, hey, that's a secure security. So when they say deeds, what do you think they're talking about?
Probably
Like
like
property.
property.
Right. Because as you know, when a customer gets a mortgage, the first thing happens, first documents that are drawn up is usually the conveyance. So if they're purchasing a property from someone else, right off the bat, the conveyance is drawn up. So the conveyance is, say I'm conveying, I sold the property to Miss Roll. And so Andrea Smith conveys to Anik, how you pronounce your name? Antonique Roll. And for the sum of, say, 50,000 consideration, it usually have on it consideration. And then it has underneath, you'll see the stamp duty, what has to be paid or which was paid. So I conveyed the property to Ms. Roll. At the end of the day, Ms. Roll goes to the bank to take a loan out. So she now has to convey the property from her, a conveyance, conveying it from her to the bank. And then a mortgage is drawn up where the bank actually draw a mortgage up from them to Ms. Roll. So you'd have, say, a Scotiabank to Ms. Roll. And that's how it goes. And so sometimes your properties have been in family for generations upon generations. So sometimes you have properties that have like so much back documents, and a lot of times lawyers don't like that. And then sometimes you find that some portions of the back documents are not able to be located. They could go to the registry, and as we know, the registry, I don't know if any of you know, but the registry was in bad state couple years ago, where a lot of documents, lawyers was not actually recording customers' document. Banks have to be running behind the lawyers to get the stamped document. And so it was a whole lot of stuff, issues happening with that, because the lawyers was not doing their due diligence. So now when customers get mortgages and stuff like that, and the stamp duties have to be paid, what the bank now do. Before, they used to send everything in the lawyer's check, but now they take out the government stamp tax out of it, and the payment to pay the registrar, they take that out. So the lawyers cannot do, they could afford to sit there and say they ain't sending it out, but the check is no longer paid to them. So government stamp tax is paid to the Treasury, Ministry of Finance, and the stamp due and the stamping of the documents paid to the Registrar General. So, but that has been an issue for a lot of lawyers. They were not having documents stamped and recorded. And if documents are not stamped and recorded, anybody could come and take claim to a property, and that's what's been happening. So lawyers was really slack on not having documents stamped and recorded in the registrar, and paying government stamp tax to the Ministry of Finance. You have people who paid off their mortgage, and their satisfaction was drawn up by the bank and sent to the lawyer. But when they go now saying, I want to probably do a deed of gift to my son or my daughter, or to actually go to another bank and take out, say, a loan, when they go, the bank is looking for the satisfaction. When they contact the lawyer even didn't stamp or record the satisfaction. So there, here again, before the person could get a loan, it has to show that Ms. Roll paid off Scotiabank, and this is the satisfaction with a stamp and recorded to show that the loan is been completely satisfied. And so, like I say, lawyers have really fall down on that. So I think it's still an issue, because with the registrar, it's still an issue. Go ahead, Ms. Rowe.
Banks much prefer dealing with securities where ownership can be evidenced in this way rather than chattels, such as
When they say
cars.
chattel, what do you think they mean?
I guess they mean like stuff that don't have no real security to it, because I could purchase a car and I could tell the bank that this is my car, but I could also sell the car.
Agreed. And don't you know people do that?
Yes.
I've heard of a situation where a young man, he borrowed the money from the bank to purchase, they like them Honda, borrowed the money from the bank to purchase a Honda. The person sold the Honda to someone else. But what I don't understand, how is it that I can sell something? How is it that the next bank who give me the loan didn't do their due diligence to know that that there's a loan out there on that car? And how could I sell the car that this doesn't belong to me? And because too, when you sell the car and if another bank is involved, the insurance actually say lost payee. So I never
Yeah.
understand how people get around that,
Mm.
even in a mortgage. Because when you take a mortgage out and you have to take out house insurance, the first thing you see on that, they say, who's lost payee? The bank.
Mm.
And they have to stipulate that Scotiabank is lost payee. So I never understand how, when people do a chattel, because they usually do chattel over cars, furniture, and machinery, stuff like that. They'll do a chattel, which also have to go to the lawyers to get stamped and recorded. All right, Ms. Rowe.
Chattels such as cars, plant and machinery, or furniture. Chattels ownership is often evidenced by possession of the asset, as documentary proof of ownership is not standardized. However valuable these assets may be, they cannot be charged or controlled as effectively as land, shares, or life policies. For business borrowers, assets that change in the course of business can be captured under a floating charge. This type of charge is available in a number of legal jurisdictions. By contrast, a finance company will use cars or machinery as assets to support lending, since the finance company retains ownership but not physical possession of the asset until it is paid for. There can be tax and cash flow advantages of this, but it is not really security in a banking sense. Another common security is the guarantee given by an individual jointly and severally or by a company. This is a promise to pay the bank should the borrower default.
Do
By
you think
itself, it is
people, hi, Ms. Rowe. Do you think people take that seriously, or people know what they're putting themselves in when they guarantee a loan? Because a lot of persons would say, what? Mary didn't pay? Well, why y'all calling me? But miss, you guarantee the loan. People don't understand that when you guarantee a loan, you're just like a co-applicant.
Yes.
People don't understand that. They feel like I just guarantee it because she needed somebody that what y'all calling me for? And they don't understand if they have an account, the bank can debit their account and pay that for because that borrower defaulted. And so that's why I'm always gonna say when people guarantee a loan, I don't think a lot of times they understand what they're doing or signing to know that they may not live in that house with that person. They may not drive that car that that person has, but they choose to guarantee so they are fully responsible, just like the borrower. All right, Mr. Earl, you could conclude.
another common security is the guarantee given by an individual jointly and severally or by a company. I read this already, right?
Yeah.
Where did I? Okay, how certain can a bank be that a guarantor will pay the amount owed? Supporting guarantees with physical security is important.
Thank you.
The,
Thank you, Ms. Earl. Yeah. Ms. Strawn, you want to pick up from where she left off, please?
Okay, the mass test. One method of judging the effectiveness of an asset as security is by using the mass test. In relation to assets held as security, the mnemonics MAST stands for transferability of title. How easily can the bank gain ownership so that it can sell the asset?
How easy can it gain asset? How easy is with a car, fine, but with a house, it's not as easy as selling a car. And that's why you'll see, like, you go to the lots where the bank have all the cars. Those cars just get sold right off because guess what? Somebody bid on the car. They say this is what the car costs. Somebody come and they say, okay, I didn't. They have the car say 7,000. Somebody decided, okay, I can bid 6,000 or 5,005, and then so if nobody else come with a higher bid, the bank actually sells that car, and it's easy for them to recoup most of the money. But now when you're talking about a mortgage, a house, it's very difficult because I think I mentioned before, like persons who live, especially in, I know before years ago in the government homes, it was hard to get them out. And then you have a lot of persons too, even though they get evicted out the house, you come back a couple days or 3 weeks later, the people back inside the house and they living in there, even though the bank has buttoned it up, they still pry the door open, go in and live in where the water and the light, all utilities are off, and they're living in there. I know I had a neighbor, yeah, her husband, they had broken up, but the bank took the house, which was her house, and I said, but and the bank take the house, what the man doing there? He used to be there, and guess what? He had like 5 pit bull dogs. So he had the dogs tied to the gate. So you couldn't even go in the yard. And then when you open the door, he had must see but 4 of them in the house. So if you miss an open and go in the house, the police had to actually come and get him out of the house. And even after that, he get rid of the dogs. He still was going in the house. He still
but
was
then,
there.
but hold on. So when I buy a house, I go to the bank and I mortgage a home. The home belongs to me and the bank.
Right.
Both our names on the conveyance.
Yeah.
Until we go to court and the court give possession to the bank solely. That's still my
Yeah.
house.
No, but the court gave possession to the bank. Because
Oh.
even the tenants who was living in the apartment, that's how I get to know the tenant. I saw her and she's like, oh, the bank take their house and the bank gave us a month and that we had to find something else. But the husband still stay there. So he's still living in the house and the bank
Oh.
take the house. Yeah, so that's how I get to know. But what I'm saying, people do that. And you'll always know because the bank has put the board inside, and so you'll see, so nobody could come through the window. But child, I don't know. I don't know how he used to get in there, but he had all his dogs. So where in the world and people could even get in there. They had to get the police. The police had to put him out. Must see 2 o'clock in the morning. The police saw him going in. They must see was plotting for him. And they tell him, you don't supposed to be living here. Yeah. Continue, Miss Strawn.
Okay. Right. Transferability of the title. How easily can the bank gain ownership so that it can sell the asset? Land, especially domestic property, is said to be a good security and meets the requirements of the Mass test. Marketability. How easily can it be sold? Ascertainability of value. How easily is it to value accurately? Simplicity of title. How easily can ownership be proved? And there is normally a good market for houses, especially in popular areas. Industrial premises or shops may be more difficult to sell, as this can depend on the planning permission needed regarding the use of land and the state of the economy. In many economies, house prices are easily ascertained by reference or professional surveyors and valuers, or just by looking at similar houses in the vicinity, the so-called drive-by valuation. In the UK, land registration guaranteed by the government since 1925 provides for a very simple way to find out who owns a particular plot of land and who has a mortgage over it. However, in other jurisdictions, the legal ownership of land and the rights enjoyed by the owner will vary. Finally,
Okay, one second for me, Miss Strawn. Okay, when they talk about like the professional who goes around, if you look at any appraisal that is done, you will see that all of the time they usually have a benchmark. So they look in the community where the house is being sold, and they would make reference to say if it's an apartment, they'd make reference to several apartments in the area, and they would say, okay, the starting price or the amount for this house would be this, and it can go to that, because they're actually doing a survey of all the houses in that area. And so they will tell you this is the benchmark between the minimum to the maximum you could get if you sell your house in a particular area. Yeah.
Excuse me, Ms.
And
Smith.
we know,
in instances where persons are unable, this is maybe going off topic, but instances where persons are unavailable to find who owns a home, what would be the best place to search to see if you can search for an owner? I was thinking that it may be Inland Revenue, because all properties should be.
You mean real property? No, because all property is not. See, now they're trying to do that, but before that was not being done. Not every property was evaluated for real property tax. And remember now, before they used to say only a certain amount, a certain value, house value, it was required to pay real property tax. And first time home owners, I think 250,000. After that, you had to pay real property tax. Persons who live in those areas, like who property is like years ago in Pinewood, in Yellow Elder, in those government subdivisions, they wouldn't have to pay real property tax. I don't know, but now, because I know they're saying everybody's building is going to be on property is going to be evaluated. So I'm like, you can't make the people who y'all say under $250,000 don't have to pay real property tax. So I'm saying, because I don't know how the rule has changed, but it's not as simple as them going to inland revenue for real property tax, because a lot of people were never evaluated to pay real property tax. The one place to start, most people start at the registrar general, where you have to go and you could flip, you go through and you'd be able to see who owned this and who owned that. So that's the best place to start. And then a lot of times you want to know who owns something, start cleaning on the property, and you'll know because somebody can say, well, I see the property cleaned down. Well, who cleaned that property down? And you know somebody will be there. Or just put a sign on the property asking the owner to contact you, and you'll know, because people don't do nothing until they see something happening. So you go clean on a piece of property which you see there would been vacant for a long time, and see if somebody don't come up and say, pastor, and say, well, who cleaned my property down? And then you have a lot of people who just migrated and went to the US. So here again, it's difficult to find. So you know what people do now? They squat on the property, because I know somebody who did this. Two neighbors, one on each side of the property, in the middle of them. So what they started to do, they plant a tree, fence it around, and so they can't find who it belonged to, because people told them that the owner went away and never came back. And so they fence it around, and them two sharing it, the property. So, and nobody has actually confronted them yet. So I guess the owner must live away or might have died. Yeah, and nobody knew of the property or no relatives. That's all I could say. But and then I remember they had a case in court where this guy of the defense force, he actually was planning stuff on this property for 10 years. And I think they say squatters' right is what, 20 years. I think they say squatters' right is 7 or 10 years. So he had to go to court. I think the people must have wanted him to go to court, and the judge gave him the property because he had all kinds of things on the property.
Yeah, because he was taking care and all his
Yeah.
boats and everything was on that.
Yeah, and he was planting fruits and every vegetables and thing you could talk about, he had it. So the court awarded it to him, and they say 20 years, but they say squatters' right is 7 to 10 years, I believe. You know, so he was awarded. He was a former defense force officer. He was awarded the property. So yeah, continue, Miss Strawn.
Okay. Finally, transfer of the title over land to a bank is effected through the mortgage deed or charge form. This provides for the transfer of ownership to the bank in case of default on the loan it secures. Of course, the bank must give back to the original owner any funds not needed to repay the loan, the surplus if any. Once again, rights to the occupancy and protection for families in distress will vary between jurisdictions. Other physical assets such as antique furniture, chattels, however valuable, makes a rather poor security. Transfer to the bank will be impossible if title cannot be confirmed. Added to that, the bank cannot control the asset without locking it away, and banks do not really want to do this on a regular basis. Securities that fail the mass test but remain popular are the unsupported guarantee and the floating charge, as we will see later in this chapter. There is normally a good market for it. Valuation is often based on opinions of experts, and there can be wide variations due to condition of the furniture, provenance, etc. Title is evidenced by sale invoices, but these are not official documents and can be forged. The furniture may be stolen.
Agreed, because how many persons today, you know, they pull up the truck to the people's house and act like they's workers and teach the people everything they have, and then we know a lot of persons have been charged with being accomplice or accepting stuff that they know that was stolen. And you know, the Bahamian people, how much you selling that for? That cheap? Yeah, let me buy that. Not even concerned whether that came from someone else's house that you buying. Because like I say, you know, people building houses, construction, you building, what happens? You go back, the window's gone, the door's gone, your supplies gone. Why? Because your persons who work for you who know, well, hey, we put them windows in, then we actually pour them. So hey, let's go back and go take them out. Hey, we put them tub in there, until tomorrow. And so when you reach there, everything gone, and people purchase it. And we know that people will purchase whatever
But
you have
people,
to sell.
yeah, but people is buy furniture too, and they know that the bank have interest in it, and they just sell it.
That's what I say, and people do that. Just like with the car, people
Mhm.
do it. And now you'd see with Furniture Plus, when you open the newspaper, Furniture Plus always have somebody in say they taking you to court. Furniture Plus,
Mhm.
always doing that. Yeah. All
Mhm.
right. Miss Roberts, do you want to continue for me, please?
Sure. Advantages and disadvantages of taking security. The main advantage of taking security for a banker is that it reduces moral hazard risk. This is the risk that the borrower will alter the default risk of the loan after the money has been lent. If the borrower is set to lose a valuable asset because the risk of the loan changes, he or she may be less inclined to change the risk profile. This is a form of moral pressure on the debtor. Your home may be repossessed if you do not keep up your repayments on your mortgage is a strong motivation and a vital part of credit advertising in the UK to ensure that the monthly mortgage payment is made. A further advantage for some loans is that sale of the asset provides the primary repayment vehicle. Having the asset as security ensures that the sale proceeds go directly to the bank. Finally, security is insurance against external events such as death of the borrower or the borrower losing their job. Taking security.
Right. 1 second, Miss Roberts. Right, but okay. Say, for instance, yes, okay, I lost my job, but you have security. But what type of security you have? If you have a security on a car that I had, which couple years old, how much money? And it seems to be like the car old, but you still lending that person $10,000 on that car with value eight. So how are you going to recoup all your money back? When the cars are every year, the car depreciate. So yes, I lost my job, but how do you sell that car for what I owe you? You can't. And a lot of times you can't. Just like I say with Hurricane Dorian and with COVID, how many cars got gone in Dorian? So what happens to the customer who just have a consumer loan, don't have the vehicle, so would the bank say, okay, yes, you don't have the vehicle, but we had the loan with you, so we need to do refinancing and salary deduction. But at the end of the day, you still don't have no security. What security you have? My salary deduction, I could lose my job again, or I could move away. So you still don't have no security. Like I said, back in the days, everything was, yeah, safe and secured. In the climate that we're in today, nothing is safe and secured because we discussed this in this class and my other class, where persons who have big mortgages, have big consumer loans with the bank, what they do, they leave their jobs and they migrate to Canada or the US. So what happens? The bank left holding a government salary deduction for a person who no longer works for government. And the only way they actually find out that, hey, that person doesn't work for government anymore is when couple payments ain't coming in. So they call in the payroll department, and the payroll department say, oh, that person left. They have this $80,000 with the bank. In consumer loan, the bank never hold anything tangible because they felt, government salary, she ain't gonna leave a job. Government salary is all we need. So right then they have no security because the person left their job and left them holding a $80,000 loan, which will eventually go into non-performing, which could go into charge off or active charge off or inactive charge off, or at the end of the day has to be written off. So security in the form of a job, if saying a salary deduction, which most banks now feel is primary, which I feel isn't, because people nowadays leaving their job and just traveling and moving away, or leaving their job and going to a job where you don't even know they still in the Bahamas working. So here again, you have to be actually really secure with when they do salary deduction, because salary deduction is no longer secured anymore, a government salary deduction, because people have actually undermined it now. Go ahead, Ms. Roberts.
Taking security also has disadvantages as the legal process needed to be perfect. The security and make it watertight can be costly and delay the loan. This can make a bank's loans uncompetitive as another bank may lend the money without security at all. As a general rule, borrowing below certain amounts will be agreed on an unsecured basis. Since the cost, competitive, and time factors are too great and reduce the bank's profit on the deal. Banks also need to maintain a good image, and this can be tarnished when security called on. For example, when a company fails and the bank sells the factory premises to get repaid, jobs can be lost and often the bank is blamed. Finally, it is thought that taking security can actually increase the moral hazard risk. If, say, a company director charges all company assets to the bank and supports the company with his own personal assets, that being house, shares, or life policy, he may think that he has nothing more to lose if the company fails and will take higher risk than he otherwise would. Contract law and bank securities. In the same way that banks must ensure that accounts should only be opened for customers with legal capacity who fully intend to create a legal relationship with the bank. So security contract must ensure that the depositor cannot later avoid the contract due to some legal defect. This is particularly important since bank charge forms are complex and lengthy documents and are often a third party deposits the security to secure the account of the borrower. Legal cases in the UK have forced banks to advise security providers to use independent solicitors to assist in the execution of security documents. Key problems that banks need to be aware of are mistakes, misrepresentation, and undue influence. A full discussion of these factors is beyond the scope of this text and will vary from jurisdiction to jurisdiction. Avoiding the legal pit. Oh, okay.
Thank you. Ms. Wallace, can you take up from where Ms. Roberts left off, please?
Avoiding the legal pitfalls. A UK example. The United Kingdom legal case of O'Brien versus Barclays Bank PLC 1993 laid down rules for banks when taking security. In all cases, independent legal advice should be offered and a note made if it is offered and not taken up. Independent legal advice where the charge form is not to the depositor's solicitor, not the banks, for the document to be explained, witnessed, and attested by the solicitor. This was further supported in Royal Bank of Scotland in Eckridge in 2001, which stipulated that in offering ILA, a bank should make direct contact with the security provider to explain, 1, that the independent solicitor must confirm in writing that full explanation of security documentation has been given. 2, that the purpose of one above is to ensure that the security provider knows that they are fully bound by what they sign. 3, that the choice of which solicitor to use must be that of the security depositor. Bank practice has evolved to fulfill the above requirements so that when any security form to be signed, it will automatically be sent to a solicitor of the depositor's choice with the appropriate instruction regarding explanation, witnessing of signatures, and other formalities, such as appropriate registration and notification of the charge.
Hold on 1 second, Ms. Wallace. Any of you, you're selling a piece, someone is selling you a piece of property. Would you use that person lawyer?
I don't think you're supposed to.
But some people do, you know. And I could never
Yes.
understand how, even if you're selling me something and we have to have a lawyer, I never understand how I'm going to use your lawyer and you selling something to me. Your lawyer can look out for you.
Yep.
So
Exactly.
even if there are discrepancies or something the lawyer knows is untoward, what is going to happen? The lawyer is not going to divulge that, because guess what? That's his client. So why should I use your lawyer and you're selling something to me? That is, but some people do it. They use the same lawyer. I'm like, no way. I'm not going to use your lawyer and you're not going to use mine. You use your own lawyer and go from there. Go ahead, Miss Wallace.
The protection that this affords is for the security depositor so that they fully understand what they are signing and can refuse to sign if they wish, and for the bank. The bank can be sure that if the EDGE system is followed, the charge cannot be overturned later. At all times, the bank must be aware of the possibility of mistake, misrepresentation, and undue influence, and do all in its power to avoid the opportunity for these to affect the security depositor's decision to sign. For the retail banker seeking to reduce its cost-income ratio, the use of ILA can reduce the requirements for in-house legal teams and security experts. Legal costs of the exercise are borne by the borrower/security depositor, and if the legal advice turns out to be flawed or misleading, the bank cannot be held liable if it has followed the precedent of the Eggridge case.
Okay, hold on, Miss Wallace. We know, how many of you have legal counsel, like persons? Miss Roll, do you all have legal counsel at where you are? In-house?
Yes, ma'am. Yeah, yes, ma'am. We have a legal department.
Okay. What about you, Miss Roberts? Does a mortgage corp have a legal counsel there in-house?
Yes, yes, we do.
Okay. Okay. Because like I know, Miss Strawn, what about y'all?
Yes, that's the same Bahamas mortgage.
Oh yeah, Bahamas Mortgage, yeah. But I know because before, they never used to have legal counsel, but now they have legal counsel who now, when the lawyers send the documents back, or before the documents go to the lawyer, they ensures that everything is in order. That's their duty. And so when it comes back, and they also put a time limit on how long the lawyer should have it. And they're the ones who will be calling the lawyers if the documents isn't back as they should be. But once the documents come back from the lawyers, the legal department also reviews the document to ensure that it is stamped, and stamp, government stamp tax, and has been registered in the registrar. But we know when the documents come back, a lot of times the lawyers would say, okay, here's a copy. They would send a copy because they can't send the original documents that need to be stamped, like if I'm conveying my property to the bank, I'm conveying it from Andrea to Scotiabank, and then Scotiabank does the mortgage conveying to me, from them to me. So then that document cannot actually be stamped right then. So the document is stamped as the lawyer will send a copy of the actual mortgage document and the conveyance to the bank, because the original has to go to the registrar for stamping and stamping of the document, and the registrar recording the document. Because if you ever look at a document, a mortgage or a conveyance document, you'll see the registrar there, and then you'll have from number 7702 to how many ever, I guess, whatever pages, and they'll have that there, and it's stamped. So, it's stamped and recorded by the registrar with their seal on it. So, yeah. So that there is, that's why most companies now have legal counsel, because the lawyers were doing real shabby work, and the banks, I guess, were coming into under a lot of heat because a lot of persons' opinion of title not done properly. That's something that the lawyer has to do. And the opinion of title of, okay, my property on the conveyance says it's Lot A, but the opinion of title have Lot B. So these are the things the legal counsel has to catch before any money is dispersed to whoever you're purchasing the property or getting the home from. So the legal counsel has to ensure that all those documentation are in line. So if I see on the opinion of title, I see Lot B, but I'm looking at the conveyance that they also drawn up, and it says Lot A. What is that? So here again, that's where legal counsel comes into play in most of the banks and different organizations now. Okay, thank you, Miss Wallace. Miss Augustine, can you pick up on page, well, I don't know, y'all can tell her which page it is because my book is totally different. But it's the key banking security.
That on the
Well, it just says
third
page
page
one.
before the last.
Yeah, everything said page one.
Third page before the last page in the book.
You said key banking securities?
That's
Right.
Okay. Key banking securities, as mentioned above, there is a narrow range of assets that form good banking security. The scope of this text does not allow for a full description of the sometimes complex legal framework surrounding them. As we will see, when it comes to creating a security over any asset, two aspects prevail: value and control. Good securities must have sustainable value, and title documents need to be deposited with the bank. Key banking securities, land, relates to land and all buildings or erections on it. Must be subjection to restrictions such as planning permissions or listed building status. Preservation of the land. In addition, overriding interest of occupants of the land can also dilute the bank's charge. Most land is easy to value using professional valuers. Life insurance policy. Contractual agreement between a life insurance company and an individual to create a sum of money, either on debt only, whole life policy, or term life policy. Contracts are of the utmost good faith and can be void if the client lies or hides facts from the insurer. Whole life policies have no value unless death occurs. Term life policies have maturity dates. Example, you can have a term life for 25 years or 50 years. The whole life and term policies can be assigned to the bank via assignment form with charged by way of security. Guarantee and indemnity. This is a written undertaking to be liable for another person's death. The guarantor can provide tangible security to cover this liability. The indemnity part of the guarantee means that it is valid even if the borrower, not contractually liable on the debt, example, is a minor. He is a minor. Debenture floating charge. A debenture is one of the most typical forms of long-term loans that a company can take. It is normally a loan that should be repaid on a specific date, but some debentures are irredeemable securities, sometimes referred to as perpetual debentures. Difficult to value as assets change constantly. As with most charges given by a company, it will be void unless registered at the company's registry. Registered charges rank ahead of unsecured creditors in most insolvency jurisdictions. All of the above securities can be deposited by individuals, jointly, by partnership, or by companies. In addition, the following can be deposited as security by companies. In effect, there is little that a bank cannot take as security, but certain assets are easier to take than others. Most assets have a fixed charge created over them, including goodwill, the value of trademarks, etc. But these will be used only rarely. The important thing to note is that each security has a legal definition, a separate legal framework within which it is developed, and a different set of specific criteria that must be considered before the security can be perfected. Valuation of security. Banks, as lenders, should view the security in most cases as a secondary form of repayment. But in order to ensure that repayment of the loan will be forthcoming, the security needs to have sufficient value.
Okay, one second, Ms. Augustine. Okay, say for instance, you, the appraisal value on a house said it is, say, 200,000, but I'm coming to the bank and I want to borrow 250,000. What do you think the bank should have me do? Because the appraisal is saying, the appraiser gives the appraisal value of 200,000, but I'm coming to the bank and I want to borrow 200,000, 250,000 to purchase this house. What should the bank ask me as a customer to do before they can grant that loan to me? Or should they grant that loan to me?
I would say that they would ask you to, if they take on that loan, they would have to ask you to bring in a lot of money, a really large deposit.
Right, because, or you have to add another security with that. Say you have a piece of property that value 100,000. You can also use that as part of your collateral. So they, in total, they have $300,000 sitting there. So giving you the loan, granting you the loan for 250,000 is okay, because they have another piece of property that you have somewhere in West Ridge or somewhere, you know, in Serenity. So they're holding that plus your other property that you have. So they fine. They good with that, the house that you're purchasing, but they're also holding your $100,000 property in Serenity. So that is adequate security. Now, if you don't have it, then you have to cough up, like Miss Augustine said, you have to cough up a lot of money. You have to cough up plenty money to be able to get that loan. And I don't think banks actually would take that risk, because as long as the appraisal says this is all the house's value, you have to, even when like they have contractors saying, okay, like for persons who want to build a house, as long as they would give the plan, the contractor give an estimate, the appraiser also has the plan, looks at it, and he does this an appraisal, and the contractor can, if the appraiser said it takes $200,000 to complete this house from scratch, from foundation to completion, and the contractor says, oh, I could complete that with 150,000. The bank will still look at that because the difference is like 50,000 that the contractor is saying he could do it for. And this is the reason why banks ask you to have at least 3 estimates when you're billing. You have to bring the bank 3 estimates to say, you know, they look at them all. Now you can say to the bank that, okay, hey, yes, this person charged me 150,000 because this is my father, and my father is billing it and giving me this cut. So your father in turn, you know, he giving that estimate and he's saying why he giving it, because you're his daughter. Yeah, that is logged down as on file, because at the end of the day, no one can come back and say, oh, we should have be more if you coming back, because the little bit you got was inadequate enough to complete the house. Then you're gonna have to take out another loan, and most of the time they may say, hey, you gotta take out a consumer loan, especially if you can't qualify getting a mortgage. So, and that's why you have to be so careful when someone is doing you a favor, because even if it's a family doing you a favor and you're building a house, make sure you look at everything in detail, because yes, look at it and do the maths. Okay, yes, contractor A charged me 210,000. Contractor B charged me 230,000, and my father charging me 150. something wrong here? Yes, he's my father, and he may look at labor differently, but as we know today, materials is hard to find. So here again, they're very expensive because when one company have it and the others don't, when you go to that company, the material is very expensive. So, and then with the shortage, because I know I was looking for cement on Friday and nobody have it. Nobody have it. So, you know, a lot of times recently, since they was having supply shortage, a lot of things you can't find, and the ones that you find, the prices are very, 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 very high. Continue, Miss Augustine, for me.
The best types of securities have readily available market information. Professional valuers, stable or rising values, as with life policies. But banks recognize that nothing is certain and that fluctuations in value occur in the short term, particularly. To combat this, banks employ lending margins. These margins represent a buffer to absorb fluctuations in value, disposable costs, and an accrual of interest if a loan is in default. Banks can also employ a worst case or going concern valuation, where, for example, the value of the asset is based on a liquidation value, as if the company or individual was insolvent and a sale had to be effected immediately. An obvious use of lending margins is the domestic house mortgage. These are known as loan to value, LTV ratios. A bank may offer a house mortgage for a maximum 80% LTV, giving a 20% lending margin buffer. Typically, house prices fall in a recession whilst loan defaults rise. So the most likely time that the security will be needed is when prices are falling. In some jurisdictions where consumer credit regulation is tight, the government will set maximum LTVs for major asset purchases, such as apartments and cars. Germany and Singapore are examples of regulation-based LTVs.
Thanks, Miss Augustine. Hi, Miss Roberts. You could pick up where she left off again for me, please.
In a gone concern valuation, assets covered by a floating charge such as stock will typically be valued at 10% or 20% of the value attributed in the accounts. Stock in an insolvent business may be unsaleable, damaged, subject to warranty, etc., all of which reduce its realizable value. There may be exceptions. For example, the stock of a jewelry store could be valued at 70% or 80%, since its intrinsic value will be based on the weight of precious metals. Since 1995, UK house prices have risen by 161%, Land Registry. The years 2008 to 2009 saw a fall of 15%, and although there was a rise of 10% the following year, prices have fallen back to 2008 values at the same time of writing 2013. Regional differences occur, with London often outperforming other regions in average value and price appreciation. In the US, house prices were subject to an unsustainable bubble, fueled by cheap loans in the period before the credit crunch of 2007 and 2008. Bankers, especially in the short term, should not believe the old saying, as safe as houses. Picking up from the mass test of security, it is valuation that causes both guarantees and floating charges to be weaker securities than they say land. The value of both guarantees and floating charges can be estimated, but it is not until they are called upon that their true value emerges. For a guarantee, unless supported by good security, the value relies on the individual's or company's ability to pay. It is easy to take a guarantee, but much more difficult to realize it. Similarly, with floating charges required when a company is in financial trouble, the value will be limited by the disposal of stocks, running down of debtors, lack of maintenance of movable assets, etc., prior to the company's failure. Just as with constant monitoring of lending, security valuations need to be updated regularly to avoid unwelcome surprises when the security is called upon.
Thanks, Ms. Roberts. Hi, Ms. Roll, can you continue for me, please? Ms. Roll?
Hi, I just had stepped away for a moment. Where do I
Okay.
start from?
Procedural steps in perfecting security.
Okay. Security in the form of land, life policies, and filling charges must be taken correctly in order that it can be used where a borrower fails to make repayment of the advance. Typically, this is a legal and practical process. A simple mnemonic diven can help to remember that the necessary steps in the security taking process. N, notification that a charge is held. D, A, and N relate to the need for a bank to control the asset, whilst V naturally relates to value. The I, investigation, factor has implications for both value and control. Typical Diven considerations when taking UK land as security are summarized in D, deposit of title documents, I, inspection of title documents and searching, B, valuation of the asset, A, authorization of the mortgage or charge. Typical considerations when taking security. Deposit. Are these are these original deeds, certificates, or duplicates? Has a receipt been given? Are the deeds, certificates complete, i.e., are previous mortgages now repaid attached? Inspection. Who owned the security? Electronic registers can be integrated where available. Prior charges. What charges need to be made? Do the providers have the power to create a mortgage? Are there any impediments? Oh, sorry, I little tie tongue. Impediments, impediment, sorry, just a little tie tongue with certain words to create the charge. Valuation. How is the security worth? How much is the security worth? How often does an updated valuation need to be made? Authorization. Who must execute the security? Is a company seal needed? How much signatures are needed? Has independent legal advice been offered? Notification. Does the charge require registration? Where should the charge be registered to protect it? Using security. The final section in this chapter and this text deals with the final act within the banker-customer relationship, where the borrower cannot or will not repay and the security must be relied upon. For business borrowers, this may involve the liquidation of their businesses. Through following the Diven procedure, the bank will have put itself in a position to enforce the sale of the secured assets. Thus, the bank can act without approval of the security depositor, but will normally have given notice to them by making formal demand for repayment of the loan outstanding. In most jurisdictions, the bank has a further duty to ensure that it gets its best possible price for the asset. Where the decision to sell is taken, there's normally no duty to wait until better prices emerge, as this can often be wiped out by continuing accrual of interest on the outstanding loan. Where domestic property is concerned, repossession can lead to eviction of the borrower from their home. For a business, it can mean job losses. Banks must take care, banks must take care to minimize the bad publicity that accompany this type of enforcement action. Rep, reputational risk is at stake if the bank is seen to be too harsh or too soft.
Okay, that's it.
And that's it.
So you think now the bank, if I don't pay the mortgage and the bank have to take my house. You think the bank is concerned about their reputation? Really? Do you think the bank is concerned? They're not. Because guess what? The court has given them the right. So it isn't like they're doing it on their own, because when somebody's house is, you go 3 months behind and they say, now we give you, sometimes they give you a chance to recoup or say we'll do refinancing. But when they don't give you that, and they said, okay, now we're actually coming after you and we want to seek possession of the house. So once they seek possession of the house, they go to the court actually give them that, okay, I have a certain number of days to be out of the place. So I'm evicted. And so I have my number of days. If I have tenants, my tenants also have a number of days to leave. But a lot of times people don't know that it isn't the bank actually saying you have to go. The court has given them the right to say, yes, this person made an agreement with you, and this is what the principal balance is. This is what the outstanding interest is. This is what the outstanding late fees are. So guess what? At the end of the day, all of that is compiled together, and where your mortgage might have been, your balance might have been 70,000 with interest, with other late fees and other charges added to that account. Because remember too, now when the bank want to repossess your homes, now you know they still pay the insurance. Some banks still pay the insurance, and for a certain number of months, I believe they still pay the insurance. But at the end of the day, the bank has to also secure their assets. So a lot of times you'll see them having the yard clean and stuff like that. So what happens at the end of the day when they get to the court, they tell in the court, well, we had to do this, we had to do that. So in that whole big figure where you only owed 79,000, now looks like 150,000, because the interest is added to it, the late fees is added to it, and any other charges like advertising fees, because anytime it's put in the newspaper or it has a real estate agent having to do the bidding for the bank, because you'll see now banks don't hardly advertise in the paper anymore like how they used to. Sometimes you'd open the papers and you'd see a whole tray load of houses, pictures of houses in the papers years ago. But now a lot of banks have now outsourced that and given it to real estate companies. So real estate companies are the ones now trying to sell. So they would be the ones who would bring clients to your place to say, okay, somebody is interested in buying and you have to allow them to walk through. So real estate companies are now doing that because banks has outsourced it to different real estate companies. And even when you see them say that, okay, we have repossessed, you may see them have their names there, but then you'd see a real estate company, Christie and Co. You would see different companies that they're the ones who working on behalf of the bank. So, like I say, do you think, any of you think the bank is concerned when they are taking possession of a home? Do you think they're concerned? Do you think they worrying about reputational risks?
No,
No, why should they? The court give them the right. So the court give them the right. You haven't paid the mortgage for 5 years, and you even ain't running, like a lot of people just duck you. Oh, who's that? That's the bank man calling? Tell him I own. Instead of they take the time and just actually go into the bank and say, this is my situation and I'm not able to do this. What can you do to help me? They don't do that. So at the end of the day, the bank goes to court. The court give them possession of their home. So you have to be evicted. You have another certain number of days to leave. And as we know, we see that happening here so much in this climate. And it is not easy when you have invested so much money into a home and to know that the bank is taking it. And I don't think most banks ever get exactly what the loan amount is, balance is, because people will bid on it and they go with the highest bidder, and never it comes to what they actually want. So they find themselves writing off whatever the difference is, writing it off their book. So they have the bank have to take the loss. And that's how it is. Anybody have any questions or concerns? And like I say, the exam is from chapter 6 to chapter 10. And I gave you assignments on chapter 6, chapter 7, and chapter 8. So you already have those. So questions gonna look like that. And then you have 9 and 10, which you have to read through. And like I say, you'd see the mass test, you'd see the division, and you would see talking about what is the deposit, what is an inspection, what is valuation, authorization, notification, stuff like that. So you'll see those asking you also the different type of securities you can take: land, life insurance policy, guarantee and indemnity, debenture, and floating charge. So stuff like that you will see the mass test. You will see that on the exam. So for chapter 10, they're the things, and chapter 10 is very short, so it's not very much to have to retain. So, and you can go through that. Chapter 9 is the same thing. It was not long. So you would see in chapter 9, we talked about the lending cycle, which is courtship, birth, life, rebirth, renewal. We talk about principles of lending, character, the compari, the ability, the mean, and the margin. So stuff like that you'd see. So these are the stuff you have to study for chapter 9 and 10. And like I say, chapter 6, 7, and 8, I gave you assignments, which I will have back to you by Wednesday. I gave you assignments. So, and then a lot of persons didn't turn in their assignments. Any of you didn't turn in your assignment?
I turn in my own.
Me,
I know you.
I just sent it a while
So
ago.
did I.
Pardon
I
me?
turn in both of mine. I turn in all, sorry.
Okay, Miss Wallace?
Yeah, I just turned them in.
Okay, all right.
When
Anyone
is the
heard?
exam?
Tuesday,
Tuesday.
the 19th, because Monday is a holiday. Anybody heard from Mr. Pickstock? Because I haven't seen him. Yeah, I haven't seen him. Nobody heard from him, and I didn't get anything from him. Any questions, any concerns for the exam?
If it's short answers or multiple choice.
I'm thinking if I want to give y'all any short answers, and if I give you short answers, it'll only be probably 5 of them worth 2 points. But I haven't made up my mind. But if it is, you'll have to answer 5 short answer questions, which will be short, and they were 2 points each, and then the rest of you true and false and multiple choice. So I don't think it's going to be hard. That'll be fine. And like I told y'all, 65% is the passing mark. So I assure you, nobody should come to the class with no C. I don't want to see no C's. No C's, no C's. Everybody should have A's and B's. Don't y'all agree? Y'all ain't agreeing?
Agreed.
Agreed.
Yeah, y'all should be fine. Like I say, y'all should be fine. And once the exam is over, I told Miss D and I'd have the papers to her by that's a Tuesday, so at least by that Thursday, because somebody else has to cross mark the papers. So I'm not able to give you your results because someone else has to cross mark. I have to send my answers and my answer key sheet my key answer sheet and someone else cross marks to make sure I didn't miss or I gave a grade where it shouldn't have be given. So someone else cross marks the paper, but I will make sure it's given to the office so y'all can have your results as early as possible. All righty. It was my pleasure teaching y'all. And I hope y'all continue on your journey of your studies. What happened?
Thank you.
Yeah.
Thank you.
Oh, but continue.
Thanks
Do
for
not
sharing.
stop. Do not stop.
Yes, ma'am.
Continue, because the more you stop, the more time you've wasted. So continue. And you never know. A lot of times people think, well, oh, I just started. And you never know. The journey may seem long, but if you fall by the wayside, it gets even longer. So try to continue on the journey. I remember when I did BIFs and I did my certificate course, that time they had 1, 2, and 3. So you got a certificate for 1, got a certificate for 2, and got a certificate for 3. And then on the overall, you got the diploma. So I would say stick with it. I got both, all 3, then the diploma. Then I went and I got my bachelor's and then I got my master's. So I'm saying stick with it. Start, I've seen a lot of students just start and then they say it's so hard, but like I say, you look up there and there's nobody smarter than the other person, It's just somebody takes more time or give more effort to something than the others. So I say stick with it and keep doing it. Even if you choose that this is not the journey I want to walk, find another journey. Like I say to people, AML is what is out there now, and we know everywhere we turn, we heard the Attorney General talk about this new AML thing coming into play now. So, AML is out there. So even if you don't stick with the banking certificate or the diploma, stay focused and try to, in the environment we live in now every year, more students coming out of school. So continue and learning is not just to advance, learning is to keep you learning and keeping you ahead of a lot of stuff that's happening around the world. So, continue, but like I say, all the best to you all, and I will have your grades to best by that Thursday. So I sure by that Monday or Tuesday, y'all should be able to get your grades from BIFs. Okay? But have a good night and
Yes.
enjoy your holiday weekend.
Good night.
How's the weather over there? Just where I am. I'm in Pittsburgh by my son, and it's raining. That's why I got sick. Yeah. So
It's getting cool now.
also it's cool. Is it raining?
No.
Are y'all ready for? Everybody got their fish ready for Easter? Or a lot of y'all on the plane going off?
I'm going off.
Yeah, be careful, because let me tell you, I don't know where you're going, but Jesus, to travel, everything is delayed. From one delay to the next delay to the next delay. Yeah, that was me on Friday. Leaving Nassau, it was a delay. Getting to, where was it? New York, and it was a delayed again. So yeah, just be safe. Because there's a lot of people in the airport. Plenty people. Yeah. Okay, y'all take care and all the best
Take care.
on exam next week.
Yes, thank you. Be
You
safe.
Okay,
too.
take care.
Bye-bye.
Okay, bye-bye.
Bye.